Hello fellow traders, welcome to today's analysis. Bitcoin has been reached $41,000 once again. So we will have exciting weeks and exciting months ahead. So let's dive in the chart for more discussion.
Cryptocurrency macroeconomic news. In recent days, Bitcoin has witnessed a significant surge, surpassing the $41,000 milestone. The driving forces behind this upswing include the fundamental aspects of the Bitcoin spot ETF, contributing to market optimism. BlackRock, a major investment giant, recently resolved disputes with the US Securities and Exchange Commission regarding the model used in these ETFs during its second meeting. Additionally, Pando Asset, a Swiss asset management company, submitted a request to the SEC last week for the launch of a Bitcoin spot ETF. Remarkably, this marks the 13th request of its kind. Noteworthy is the reduction in the discount of Grayscale Bitcoin Trust, signaling institutional investors positive sentiments towards the potential approval of the Bitcoin spot ETF. In a speech last week, Christopher Waller, a member of the Federal Open Market Committee, known for his typically hawkish stance, surprised by adopting a dovish tone. Contrary to expectations, he hinted at the possibility of interest rate cuts. This unexpected shift is considered a key factor propelling Bitcoin's growth to approximately $38,500. In last week's report, Federal Reserve Chairman Jerome Powell delivered a speech on Friday. As anticipated, he expressed reluctance to implement immediate interest rate cuts. More significantly, his remarks led market participants to believe that further rate hikes were unlikely, and they should potentially anticipate a rate cut in 2024. Economic analysts who had previously forecasted interest rate cuts in June and May have now shifted their expectations to March 2024. They estimate the interest rate at the end of 2024 to be around 4%. This reassurance served as a stimulus for Bitcoin, propelling its value to $39,000. Simultaneously, gold continued to set new records, surpassing its highest historical price at $2,080. Notably, the correlation between Bitcoin and gold experienced a substantial increase, reaching approximately 72%. In recent days, global bond yields have experienced a notable decline, with the yield of 10-year US Treasury bonds reaching 4.2%. This decrease is likely linked to the anticipation of interest rate cuts, expected in both America and Europe. The corresponding reduction in bond yields has played a role in driving up the markets for cryptocurrencies and gold. Particularly noteworthy is the substantial drop in the correlation between Bitcoin and 10-year bonds. The correlation has shifted from 150% at the beginning of last month to 50%, marking a significant change in the relationship between the two. One noteworthy consideration in the current period is tax loss harvesting, a practice that typically occurs in the early days of December. Given the recent upsurge in crypto and gold values, investors may contemplate divesting assets like bonds. While this could potentially decrease the price of these bonds, it may also elevate their yields. However, this scenario may not be favorable for the crypto market, as an increase in bond yields might lead to a continuation of contractionary policies and the deferral of interest rate cuts by the Federal Reserve. Additionally, on Tuesday, 5th of December, data on US job openings with excluding the farming industry will be published. Projections suggest this index will decrease from 9.55 million to 9.33 million. Should the reported figure fall below 933 million, it could be linked to an upswing in the crypto market. Such a scenario indicates a potential need for expansionary policies and a decrease in interest rates. On Friday, in 8th of December, 3 important data on the American economy will be published. Average hourly wage data in the US, which is expected to reach 0.2% to 0.3%. This data is a symbol of inflation, and values lower than this forecast will be in the direction of the crypto market's rise. Data on employment changes in the non-farm sector of the United States, which is expected to reach 150,000 to 185,000. Values lower than this forecast will be in the direction of the crypto market's rise. The US unemployment rate is expected to remain constant at 3.9%. Amounts greater than this forecast will be in the direction of the crypto market's rise. Bitcoin has moved up again after hitting zero due to the 7-day MVRV. Since the measure of realized profit is still low, we can expect Bitcoin to become higher in the future. If the price corrects, $38,000 will serve as a strong support. According to the recent strong Bitcoin movement, the price will increase to $44,000. In this range, MVRV levels will reach their highest level and drop. Considering the current market conditions, the price could drop up to $38,000, starting at $43,000. In the daily time frame, we expect the price to move to the levels of $48,600, according to the formation of the existing structure. According to the structure of the chart, in 4 hours' time, if the ceiling of the ascending channel is broken in the range of 39,193, you can buy with the target of 41,000 and set loss limit to 37,400 and purchase offer to 39,113. Finally, set loss limit to 37,400 and goal to 41,000. In the daily time, with the breaking of the ceiling of the ascending channel in the range of 39,147, there is an expectation of price growth. Purchase offer is 39,147 and loss limit is 36,000 and target is 42,000. By checking the weekly time, with the breaking of the resistance line in the range of 43.50, we can be optimistic about the price growth in the long term. Purchase offer is 43.50, loss limit is 35,800, and goal is 44,000. By checking the monthly time, if the ceiling of the ascending channel is broken in the range of 39,700, we can be optimistic about the price growth. Purchase offer is 39,700, loss limit is 36,000, and target is 43,500. And now the chart price reached red resistance. Last week, by mentioning the possibility of rejecting the orange resistance and reaching the red resistance, it was given and then accompanied by the upward trend of black until the cautions were activated. The blue line is static support and the orange line is static resistance. And at this time, until the support of the blue line is not broken and the price is stabilized below this line, you can keep pace with the green candles. After hitting the middle band of Bollinger, the price has returned to the top, and the tendency to reach the upper band of Bollinger should be considered. The price has been able to overcome the resistance of Key Johnson's red line, and now this line has become a support. On the other hand, Tenkan-sen's blue line coincides with the orange static resistance line. And considering that there is no obstacle on the Chikwuspin green line, there is a possibility of seeing the place of conformity shown by the hand gesture. In addition to the fact that the price was able to cross the Kai-Johnson red line, the price was also able to cross the 0.382 Fibo level. Due to the fact that there is no obstacle to the movement of Chikwuspan's green line, now there is a possibility of reaching the 0.5 Fibo level, which also corresponds to the flat part of Tenkan-sen's blue line. Place indicated by hand. The blue line, initially a broken support, has now transformed into a resistance level. The price successfully surpassed this resistance, and the line has reverted to playing a supportive role once again. With the ongoing upward trend of the green line, there exists a potential for overcoming the resistance posed by the orange dotted line. It's worth noting that there is resistance at the purple line, which suggests the need for vigilance. Consequently, it is advisable to monitor the trend, exercising caution with both black, medium-term, and blue, long-term considerations. Please be aware that short-term caution is warranted if the price decreases and stabilizes below the orange line, as illustrated in the monthly chart 3, displaying this caution in orange. Considering the proximity and alignment of the 0.382 and 0.5 Fibonacci levels with the blue static support line and the purple static resistance line, there exists a likelihood that the price could surpass the orange resistance and advance towards the subsequent resistance area. It's important to note that based on this alignment, the bold blue area signifies the support zone, while the red area represents the resistance zone. This observation suggests a potential scenario where the price may find support within the bold blue area and encounter resistance as it approaches the red area. Given that the price has successfully surpassed both the 0.5 Fibonacci level and the Kijun-sen red line, and there are no impediments for the Chikou span green line, there is now a likelihood of reaching the horizontal level represented by the Tenkan-sen blue line. Notably, this level coincides with the 0.5 Fibonacci level, further reinforcing the potential significance of this point. In the previous week's report, with the price transitioning from the red downward trend to the blue and green upward trends, the potential for surpassing the orange resistance and reaching the purple resistance was noted. Consequently, until the specified cautions remained in effect, it was not advisable to follow Barvan. As anticipated, the price has indeed rejected the orange resistance, leading to the transformation of this resistance into support. Now, in addition to the ongoing short-term caution in black, medium-term, and blue, long-term, a new short-term caution in orange can be considered. This short-term caution is illustrated more quietly in the next figure, represented by the orange caution. With the price's rejection from the orange resistance and its conversion into support, we can now consider a short-term caution in orange, in addition to the existing black, medium-term, and blue, long-term cautions. The question arises, what impact does the transformation of the orange resistance into support and the addition of the short-term orange caution have on the medium-term black caution and long-term blue caution? In the context of the medium-term caution, whether the orange support breaks or not has no effect, and this caution remains unchanged. Concerning the long-term blue caution, two scenarios may unfold. If the orange support breaks before reaching the green trend line, the long-term caution remains blue. If the orange support holds until reaching the green trend line, the purple long-term caution may replace the blue caution. In this case, the purple caution takes the position of the blue caution due to the non-activation of the orange caution, extending slightly higher to the green line. In previous reports, the forecasted gathering of the red cloud and the initiation of the green cloud formation have materialized. The red cloud has now transitioned into a green cloud. Notably, the price candles have penetrated the green cloud, and with the absence of obstacles for the Chiku span's green line at the current location circled, there is a potential for the price to traverse the entire green cloud and reach the flat line of Kijun-sen's red. While earlier reports suggested the possibility of a pullback, initially to the orange line and then to the purple line, the pullback indeed occurred to the orange line. Considering the consolidation resistance observed at the purple point, there remains the potential for a pullback to the purple line. In a simplified view, the price, after departing from the red downward trend, initially encountered this trend line before advancing. Given the current position within the blue upward trend, the likelihood of a pullback can be temporarily disregarded. The probability of the price reaching the blue trend line was high, as seen in the figure below. Despite being in the resistance of the red dynamic trend line, the price, fixed above the 0.5 Fibonacci level, indicates a potential for reaching the 0.6 Waitan Fibonacci level. Caution is advised in the figure. As anticipated, the price successfully surpassed both the orange and purple resistances, converting them into support levels. Although the blue support line is absent, the pullback to it after departing from the red trend is not a cause for concern at the moment. While there remains a possibility of a pullback to the purple line, the trend can be followed until the activation of the black caution. Regarding the black caution, a decrease in price and its fixation below the orange line triggers the caution associated with the blue line. The figure demonstrates the 2.618 level of this Fibonacci, coinciding with the orange line, which served as a resistance but is now a support. Following this Fibonacci, the next level is 3.618, and the black caution also holds for this Fibonacci. Specifically, the black caution is activated when the price decreases and stabilizes below the 2.618 Fibonacci level and beneath the blue line. According to the drawn Fibonacci, the current support range is highlighted in bold blue. The loss of this range would trigger the activation of the black caution. Until this caution is activated, the trend can be followed. In previous reports, a decrease to the 2C support range was followed by an increase in alignment with the trend until the caution was activated. Now, with two Fibonacci levels, one marked with 2 purple dots and the other with 3 black dots, the 0.618 bunch Fibo level has transitioned from a resistance to support, while the level 1 of the 3 black Fibo points currently serves as resistance, causing a pause in the price movement. The break of the green upward trend line suggests the possibility of reaching the 0.786 purple Fibonacci level. However, it's crucial to note that caution from previous reports is still relevant, and a new caution is specified for the present time in the next figure for practical purposes. Due to changes in time and chart position, the black precaution is no longer relevant. Instead, risk tolerance and transaction time considerations can lead to the consideration of blue, orange, and green cautions. The blue caution holds more significance in the short term, given the re-entry into the green trend. The orange caution is important in the medium term, as the medium-term support of the orange dynamic line has been breached. The green caution carries long-term importance due to the break in the green support line of the long-term upward trend. Several key lines have transitioned from resistance to support, including the red dynamic resistance line, orange static resistance line, black dynamic line, and bold blue dynamic line. Considering these transitions, the more reasonable caution is the black caution, activated when the mentioned supports are broken and the price stabilizes below them. it's essential to consider swing cautions. But for those not actively engaged in swing trading or lacking the time, skill, and speed for it, it might be better to ignore small fluctuations. The blue static support and the purple dynamic resistance, now acting as support, are prominent supports at this time. If the price falls below the blue point, the intersection of these two support lines and stabilizes, the swing caution will be activated. Note, it is generally advisable to focus on small and volatile precautions when there's a potential trend change. However, when the trend direction is clear, it's preferable to avoid small precautions that go against the trend to minimize the risk of staying out of the trend. These precautions become more relevant when there are doubts about a potential trend change. The convergence of the 1.618 green Fibonacci level with the 2.68 orange. Fibonacci level suggests the possibility of encountering this level. If the resistance at other levels is breached, the subsequent levels to watch for are within the orange Fibonacci range. Note, the figure includes precautions based on the depicted Fibonaccis. In the 4-hour time frame, breaking the resistance level around 53.44% indicates an anticipated growth to around 54.30%. Violation of the 52.80% range from below would invalidate the above analysis. On the daily time frame, the index is in an upward trend. Breaking the 53.52% range suggests an expectation of growth in the symbol. On the weekly time frame, breaking the downward trend line within the range of 56.19% implies an expectation of long-term growth for the index. Similarly, by checking the monthly time frame, breaking the downward trend line within the range of 56.96% suggests an anticipation of long-term growth for the index. Examining the 4-hour time frame, the failure of the 11.45% support suggests an anticipation of the index declining to the range of 11.40%. However, if the 11.75% range is breached from above, the aforementioned analysis would be invalidated. On the daily time frame, breaking the upward trend within the range of 11.33% leads to a more optimistic outlook for the decline of the index. Analyzing the weekly time frame, observing a return of the index when hitting the resistance level in the chart structure is noted. An expectation of a drop in the index arises if the upward trend breaks within the range of 11.24%. In the monthly time frame, the index is currently in an upward trend. Breaking the resistance range of 12.89% fosters an expectation of long-term growth for the index.